Please give my panel a warm round of applause. Thank you. Please take your seats. I mean, I think we've talked about how everyone's going to be very excited on the 5th of November. The world is watching. And I think a lot of us have alluded to the fact that we have very different visions between Donald Trump and Kamala Harris. So it touches on the areas of differences are fiscal spending, trade, geopolitics, and green energy. But let's start with fiscal spending, shall we? I think, Charu, I think you touched on a fair bit of that. So both candidates have proposed fiscal spending programs that are set to raise the US debt levels, right? They both intend to finance this through taxes, but both have different opinions on that. So Trump has made his case on extending the tax cuts that he made in 2017. This would benefit businesses and the wealthy, and likely to raise taxes on imported goods. Kamala Harris, on the other hand, progressive tax reforms that seek to benefit the middle class. But this, of course, is one that may raise corporate and capital gains. Charu, I would love to hear, or Stephanie perhaps, how do you feel these policies, how will they impact the market?
Yeah, I guess obviously, there's, as Charu mentioned, there's still a lot of uncertainty as to, who actually gets the White House. And I think being an investor for 20 years, this every year has been a humbling experience. This year is no different. I think if you look at the election, let's kind of do a thought experiment of rolling back to beginning of the year and think about, if I tell you that you're kind of like in the US election, the president candidate would get assassinated twice. And if I ask you where you think S&P would be, I think very few of us would think that S&P is still making all-time highs. But these are the times, right? These are kind of the extraordinary times that we're in. Seriously, after COVID, we're into kind of new territories. I think if you look at kind of the policies of Trump and Harris, of course, Trump is talking about extending the rate cut for corporates, whereas Harris is talking about actually increasing the tax rates for corporates from 21% to 28%. However, if you look at kind of what the likelihood of a split Congress versus the White House kind of probabilities, as Charlie mentioned, very, very likely we're going to get a split Congress and White House, which means that a lot of the Harris policies are probably too kind of progressive for even Democrats to be unionized on that, and that a lot of these policies may not actually get implemented at the end. And if we think about markets, I think at the end of the day, what we look at is actually what is happening to growth and inflation. And there's been a lot of analytics showing, I'm sure a lot of us have seen this chart of showing the relationship of the S&P making all-time highs with the probability of Trump getting into the office. And I think some of these charts may look quite nice, but at the end of the day, the market is a very, very complex object, right? And one single reason cannot explain everything that's going on. But markets ultimately comes down to corporate earnings, and corporate earnings comes down to growth and inflation. I think what we've seen this year is that, US growth has exceeded expectations until the last 2 or 3 months, where again, there's some concerns that US is going to enter a recession. Hence, the Fed actually reacted with a very swift 50 basis point cut. When we look kind of one layer deeper into what's causing a lot of these slowdowns, a lot of companies actually cited the uncertainty going into the election because of the differences in policies that Trump and Harris would bring. Therefore, if you put your mind into the shoes of a CEO, of course, you would wait for 2 more months to get certainty before you make any kind of big investments or hiring plans. Yeah. So we think that actually a lot of the kind of slowdown that we're seeing recently is due to this uncertainty into the election. And that past election, once we have a clear winner, a clear outcome, then a lot of these investments and hiring would actually resume. And particularly given that the Fed has just cut 50 basis points, that gives another boost to growth in the US. So, I think what the outcome is, while the outcome is uncertain, the certain thing that, for example, Jim has referred to is that we're going to get an election, and that should clear the uncertainty.
Absolutely. Charu, can I get your thoughts on this?
Yeah, no, absolutely. I think fiscal spending is certainly something, getting a lot more highlight going into the election, but is usually, such a big problem. We're at 6% of GDP in terms of fiscal deficit, $35 trillion of debt. For an economy that was doing just fine, right? The economy is growing, employment levels are healthy. It is obviously something very scary. My sense is this is going to go on, right? Like I said, infrastructure spending is something which will be the first few announcements that you get from any new administration. And what that means for the economy, before I get to your point on markets, what that means for the economy is, yes, growth will continue to look strong, but the risk is on the inflation side, right? Inflation also jumps. And what can really stop it? I think unless, of course, the markets start to punish the administration, markets become dysfunctional. Well, that is something we need to watch for. If inflation continues like this, the markets will react in a way which would not be acceptable to any new administration. Yeah. Again, I'm not taking sides. Going to be Trump or Harris. They're both going to spend. But there has to be a stopping point, whether that comes from the markets or that comes from the regulators where they potentially get a rating downgrade. I don't know, if that's possible for the US to get a rating downgrade, but that is a big problem. And, Stephanie mentioned, the only way we can possibly see less fiscal spending in the current scenario is if we get a divided government, which is, yes, it could put some brakes on spending, but then that also means that we start to see weaker growth into the next year. Probability of a recession goes up as well. So we really have to be careful what we wish for here. Yeah. You need that spending to continue this momentum and growth. Yeah. And you still need to watch for inflation risks. So certainly very uncertain times. I would not be speculating, but really watching the policy announcements that come through once we are past that 5th of November.
Now, I want to pick up on something that you mentioned in your presentation earlier, that you did say, right, on tariffs. Trump is putting 10% tariffs on imported goods, 60% on those from China, in contrast with Harris, who said tariffs are relatively just sales tax on the American households, right? That's how she's put it. So we know China will be impacted. While you've got the mic there, how do you feel this will impact other markets, and how will this affect us in Singapore?
Yeah, so like you said, it's really about phrasing it differently, but overall, the bottom line is that we are in a deglobalizing world, and that will certainly be, more out in the news when we have Trump and, shouting on Twitter, on, news channels about how China is, misusing and trying to, take up the manufacturing share and all of those stories. Obviously, that would create additional volatility in the markets. But at the same time, any other administration is really following the same policies. So here in Asia, it seems like more markets have benefited out of it than those that have been negatively impacted. If I just very broadly classify Asia, certainly the export-oriented markets do get an impact on the export demand as such. But Singapore, particularly, I would say is, they have a very diversified manufacturing base. It is also considered to be a safe haven if you look at the non-manufacturing side. In fact, I would think all of that volatility could fuel additional inflows into Singapore being the safe haven. So I think that kind of offsets a little bit of that headwind as well. Singapore is the only country actually in Asia which has an FTA with the US. So they have a trade agreement, and I think that's going to be able to provide some offsets. So overall, I'm not going to paint a very rosy picture here. There could potentially be some headwinds for Singapore, being a very export-dependent market. But I think Singapore is resilient enough to be able to fit well in those shifting supply chains and be able to find a strong position for itself.
Let's go further up north a bit. How do you feel this will be impacting Hong Kong?
Yeah, I guess, since Trump 1.0, the China-US relationship has been deteriorating, right? And I think if you think from kind of a sovereign perspective, US is building its own kind of sphere of influence. China is doing the same. And I think as Charu mentioned, the Biden administration, really didn't change that course. And in fact, if you look at what's happening this year, the Biden administration actually slapped a 100% tariff on China export to EVs. And I mean, the European, governments are actually debating that right now to whether or not to slap on a 30 to 40% tariffs as well. If you look at kind of the Chinese economy right now, obviously China is trying to pivot away the reliance on property. I mean, for over 2 decades, I mean, property has been the driver of the Chinese economic engine. And for the Chinese government to be able to pivot away from property, they need other bigger sectors that are growing to support the economy. And if we think about what are these sectors, I mean, EV is obviously one big sector. I mean, if you don't buy a house, like your car is actually the next biggest spend. And China being able to export the EV technology is actually pretty important for the Chinese economy. The second biggest kind of area for growth for Chinese government and obviously the economy is technology. And a lot of this is in hardware, semiconductors, AI. Again, I mean, this is an area where, I mean, US is imposing controls on China, and that's not going to change even with the tariffs or Trump in the office. So I think if we think about kind of the evolution of events, it's, I would say that Trump 1.0 actually kickstarted it, but it wasn't only because of Trump.
Yeah.
If you look at history, I mean, whenever there's I guess Ray Dalio did a great study on the rise of nations. I mean, these actually, I think these sort of competitive dynamics would naturally develop, and it's just the course of events. I think, of course, if Trump gets into office, very likely he'll be able to sign executive orders, I guess, within weeks of getting into office, which would actually have significant impacts on trade tariffs. That is much more immediate. But I would say that in both scenarios, the long-term kind of divergence of US-China would continue.
Now, Nick, I'd like to get your thoughts on who might benefit from this fragmentation.
Well, that's a good question. I'm not sure that anyone benefits from taxes, but again, I'm only going to talk about the commodity market because I'm not very good at macroeconomics and financial products. Commodities are slightly different, and I'm going to focus maybe just on the relationship between China and the US. Actually, if you look at commodity flows, it's more China importing agricultural products from the US. It's more China importing energy from the US. The other way, where it goes from China to the US is probably with metal. And again, and correct me, Sam, if I'm wrong, but I'm thinking more about battery metal, things like lithium ion, okay? And what we've seen in the past, in 2018, for instance, when Trump imposed tariff on China, there was a retaliation from China who put tariff on US crude oil, US LNG, US pork belly, soybean. So there was not really a winner between the two. The one who would probably win around that was other producers, like if I go back to oil and LNG, Russia benefit from that, the Middle East countries, definitely. In the agricultural markets, Brazil benefited a lot because they were exporting much more soybeans and beef, cattle to China. And back to metal, what I was saying is, I mean, US are importing probably, we say 2/3 or even more of their lithium ion from China, which is very important component of battery for the EV industry. So that could have a massive impact on the nascent battery producers industry in the US and for Tesla as well. So that may be the reason why Elon Musk has decided to endorse Trump, maybe to avoid those kind of scenario, who knows. But yeah, it's very difficult, I would say, to pick up winners and losers in those kind of scenario.
I mean, let's shift a little bit and talk about geopolitics, right? The strain between the US-China relations, that's a big part of the debate. Harris is expected to adopt a more pragmatic approach. Trump is more confrontational in his approach, but both have agreed that China is a strategic competitor. So, Stephanie, I want your thoughts on how, given the recent performance of the Chinese market over the past week, how do you anticipate the election outcome might affect Chinese stocks?
Yeah, actually, I mean, I guess if you look at year-to-date performance of Chinese equities, it has surpassed the US equities. And I think, 2-3 weeks ago, nobody would have expected that outcome either. So like markets are always changing. And I think if you think about kind of what's causing this rally, very, very quick rally, 20% rally in Chinese equities, of course, it was triggered by the policy decisions or joint announcements from PBOC, even from like kind of the central government in stopping the downward spiral of property markets. So that showed a lot of determination. But I think more importantly is driven by two other factors. Number one is that the Fed actually started its loosening cycle. And if you think about the timing of events, the Chinese government actually timed it quite perfectly. It is after the Fed has cut 50 basis points, which weakened the US dollar, which gives China the ammo needed to announce these policies, but also before or during the celebration of the party's anniversary. So, the timing of this is actually, I think, quite significant. And also, if there's a second factor is because if you look at kind of allocations of global funds, a lot of global funds are actually under-allocating to China because China was actually uninvestable in the last 2-3 years. And the fact that Chinese equities had not performed, there's no pressure to chase into these equities. With that flip, now Chinese equities is now outperforming US equities. That forced a lot of these underweight allocators to actually very, very quickly catch up to at least market weight. And that's a lot of inflows into the Chinese equity markets. So I guess the next question is, how is the election going to impact the Chinese market going forward? I guess the reason why I brought out these reasons is because I don't think actually the election has a lot of impact on Chinese markets. Because if you think about the Fed's monetary policy, the China domestic policy in terms of stimulating its own economy, these don't have a lot of relationship with the election outcome, and particularly the election timeline. So I think it goes back to, again, what the monetary policy is in the US, which is more important for thinking about the policy response from China. And to us, actually, once the Fed has started its policy of easing, it gives the US dollar a weakening kind of angle, which allows the Chinese government to actually be a bit more aggressive in terms of the policy response. And clearly, I think the first important milestone they need to achieve is to stop the bleeding from the Chinese property market. Because if you look at property prices in China, they have been declining about 5-6% annualized for the past, in this year and for the past few months. And what does a declining property market do? It damages confidence. And the biggest problem in the Chinese economy right now is the lack of confidence for the consumer and, more importantly, for businesses to invest. So the first milestone is to reverse this kind of decline in property prices. And I think there is enough determination and also enough room for policy response to revert that. Maybe I'll just stop at that.
Okay, no worries. I know we have a lot of room to cover. I just want to ask you, Nick, tapping into your area of expertise here, with natural gas prices going higher, especially now with the winter season, how will Europe be impacted when it comes to pricing, or has that already been factored in? And is it possible that if Trump is re-elected, he could make a deal with Russia?
Yeah, first of all, winter is coming. There's no surprise, but it's always a time where natural gas markets become even more volatile. I was mentioning that natural gas markets are always very volatile. In winter, it becomes even more volatile. I think the market, which is probably would be more impacted by geopolitical risk and potential, scenario if Mr. Trump is re-elected and if he managed to broker a peace between Russia and Ukraine, which still needs to be proven. The market that would be more impacted would be clearly the European gas markets. So right now you mentioned, prices are going higher. This being said, they are around, we say, $13 per MMBTU, which is way lower than where they were 2 years ago. The market is less concerned about geopolitical risk right now. Inventories are relatively high at this moment in Europe, around 95 5% of the total capacity. So yes, of course, if Mr. Trump were re-elected and if he managed to broker a peace in Ukraine, that's very bearish signal for the nat gas market. Also, I think that European Union have learned that having too much dependency on Russia for the supply of natural gas might not be a good idea, okay? And you might have picked up from my accent that I am actually an EU citizen, so I know that's the feeling in Europe, in Germany, in France has really changed. You know, as long as Putin is going to remain in charge in Russia, I think European countries, even if there is a peace in Ukraine, they would be probably a bit more careful than they used to be on really relying too much on a Russian import. I think the biggest risk right now, geopolitical risk in the natural gas market, is actually what's happening in the Middle East. If you have an escalation of the conflict between, let's say, Iran and Israel, and that starts to impact you know, the shipping traffic in the Red Sea, that could have a massive impact actually on the LNG flows from Qatar to Europe. Again, Europe has moved away from Russian gas, so now they rely a lot on US LNG and Qatari LNG imports. So I would say that probably the biggest geopolitical risk right now in the nat gas market is maybe more what's happening in the Middle East.
Okay. Charu, would you like to add it? You were nodding away.
No, I mean, I was actually just I agree. I mean, winter is coming, and as much as we don't feel it in Singapore, it does create a lot of volatility in the natural gas markets. We've seen that over the years. But I think, I would say the risk of this escalation, and I hope we get proved true, the escalation in the Middle East is also pretty limited, and that's again coming back to the points that we have elections coming, and US plays kind of a heavy hand here. Of course, this weekend is going to be particularly critical for that, I would say. I think that's something we need to watch for, what kind of a response we get from Israel, and whether it is just a show of strength, if anything, or it goes beyond that and really targets the oil assets, or even probably the nuclear plants in Iran. I think that's really something to watch for this weekend. I think certainly I'll be sitting in front of my news feed.
If I just may add, the question I think is not whether or not Israel is going to fight back, it's more when. This is going to happen. So, you just...
How severe
and how severe
is, what do they really target? I mean, it could be as much as what they did back in April, right? Just a show of strength, and then Iran decides, okay, no, we don't want to get back to this one. So that seems like the easiest solution to it right now. And with US elections approaching, I would say that remains the base case as well, and I would hope so too. But it certainly has room to get worse than that as well.
Yes, absolutely. Now, earlier on in the evening, we touched on climate change and green energy. Both candidates have differing views when it comes to supporting green energy. We saw that in the slides earlier. Trump has rolled back hundreds of environmental protection policies and has been very critical on EVs and the renewable energy industry. Harris, on the other hand, has promised to support climate change policies through renewable energy and EVs. Charu, this is for you. With Fed rates going down, this is positive for renewables. Where do you see the market of renewables going from here?
So fundamentally speaking, I showed in my chart as well earlier, right? One of the biggest headwinds for renewables has been those higher interest rates. It's been more than any administrative policy, really. It's those high interest rates because it is a capital-intensive business. You want to set up a solar plant, you want to set up a windmill, you need high amounts of capital for that. On the contrary, you are competing with fossil fuels, energy companies which have some very robust balance sheets, they've obviously done a lot of cleaning up in the past, and they have relatively resilient balance sheets now. So for them, high interest rates have not been such a problem, and that's why we've seen this little bit of a break towards, I would say, adoption of renewables. It is certainly, I think, a critical time with the administration change as well as the shift in monetary policy. But I see supportive factors. If the cost of capital is going down, I don't see why any of the president would oppose climate change. They have climate goals to meet by 2030. They have these strict targets which they need to meet. So I would again say, the rhetoric could be very different. In fact, if I dig deeper, go within renewables, yes, the kind of renewable sources that they support could be very different. Yes, Trump could, speak up about EVs and be against it, but carbon capture is something which remains very important to meet those goals on climate change. So effectively, I do think that this is a policy that will continue to get different rhetoric, but the same amount of support from both of the candidates. And in terms of the market, I think the market was about $500 billion back in 2022. And of course, there's been quite a bit of slowing since then, but I don't see how it would not be above, say, $1 million, maybe double of that in the next 3-4 years.
Nick, I'm curious to know, Harris has been further balancing her views on green energy. Perhaps this is the demand from chip production or AI development that can't be met. So do you feel Harris can stick to that renewable goals and forget about oil and gas?
You cannot forget about oil and gas. It's probably too early, and the news of the death of the oil industry is probably premature. There's still a few years before that. No, Harris can achieve a lot, and Trump as well. And I'm afraid today we agree on pretty much everything, which
that's not good.
That's not good. Yeah, usually we don't. But I think both candidates will. Let me formulate that this way. I'm really surprised now that when we talk about renewable, we only think of it as a means to reduce carbon emission. It's not always that. It's not only driven by policy to curb GSG. In some cases, it just makes more sense to use solar or wind. I take an example. The EIA very recently published a report saying that in the first half of 2024, 60%, actually it was 59%, but let's say 60% of the new power generation capacity installed in the US were solar. And when you look where those investments took place, 2 states come on top of the list. First is California, no surprise. But the second state, actually the number 1 in the list, was Texas. Okay, Republican state, home of the oil and gas industry, but still, they invest a lot into solar. Why? Because if you're a state like Texas, which has a huge land, a lot of sun, and as long as they can import cheap solar panel from China, when producing electricity from solar makes sense. It's just like you don't need policy for that, okay? So I think you have really forces that push in certain sectors like electricity, power generations for renewable. Now in other aspects like, for instance, renewable biodiesel, it's a very different story. It's all driven by policy. But then again, when you look at the details, you have the federal policies, which are mainly, I would say, tax credits. A lot of that have been generated by Biden administration and the IRA, okay? So Harris will probably double down on that. So you can see that as a key driver for continued growth into renewable diesel in the US. But actually the real driver of renewable diesel growth in the US has been, again, California and their low carbon fuel standard. All of the renewable, or pretty much all of the renewable biodiesel consumed in the US is consumed in California. And again, the US elections are not going to change what the California state is going to decide. It's, there's no impact there. So you have the federal policy and then you have the state policy.
And I'd like to just emphasize here again, if I can come in, Charmaine, the fact that, again, back to your question, right, renewables is growing, but does that mean the end of fossil fuels? It's certainly not. We are not in a space where you have a solar plant or you have a wind farm. I mean, our headquarters are in Denmark, where there's a lot of wind energy that is used. And I speak to my colleagues sometimes, and they say the wind's not blowing. So what do we do? Are they not going to shift back to fossil fuels? So certainly we are. I think we're going to stay in that balanced world for quite some time. And the growth of renewables has to come hand in hand with the growth of energy storage as well, because you want to be able to store that energy and use it on a day when the wind is actually not, blowing. So I think, of course, it is, several decades of, a mixed energy sources from here.
Now, we've got some questions that were upvoted by you earlier, and I'll get to those before we go to our final question. I love this first one. I think everyone's curious to know, this is open to everyone on the panel. Which Chinese companies do you think can hold up well despite the tariffs and sanctions? We're pointing at Stephanie to get the ball rolling, I think.
Okay. Well, I guess I think so. We at StashAway we don't invest in single names. So perhaps I'll dodge the question about talk about sectors. So I think Charu mentioned you're very, very positive on healthcare. We actually share that kind of sentiment as well. I think healthcare actually is a global theme. We see China healthcare being also a growing industry with very, very defensive characteristics. Obviously, China has a population problem, has an aging problem, and that needs to be resolved by better healthcare. And that also creates a better social kind of safety net for Chinese citizens as well, which supports kind of the goal of the Chinese leaders. So I think, if regardless of election outcome or Chinese tariffs, I think healthcare sector is actually very, very well positioned in China.
I'll just say one line here, and this is true for any market, but very, very true for China. Put your money where the government is spending their money, or the things there where the government is focused. In China, you cannot take a call which is not in the good books of the government there. So I think, I hope I'm not being too controversial here, but state-owned enterprises, I think that's been a big focus in China, although I do think they need to obviously revive their private sector as well to really manage the headwinds, the structural headwinds that they've been facing. So there is a little bit of a sense that they're going to start focusing on the private sector as well. But yeah, I think follow the policies of the Chinese government, whether that goes into technology, healthcare. I think, even energy transition is a really big theme in China as well. So I guess we just keep on the radar what the government's announcing there.
Nick, you agree? Okay, all right. Okay, now this one was also upvoted. Do you think the US debt levels really matter for the financial markets and the dollar?
Maybe I'll take a stab at that. I think it's not just really important, it's actually should be part of how you think about your structural portfolio allocation for the next decade. Because regardless of whether Trump gets into office or Harris gets into office, US debt to GDP ratio is going to rise substantially, right? Today it's below 100%. Under Trump scenario is going to rise to 116% by the end of the decade. Harris, 109, doesn't really matter. It's going to go up. And the US will actually have to issue quite a lot of debt. And I think there's questions as to, how and who is going to buy all this debt and at what price. And as we all know, that affects bond prices and bond yields. And based on, today we all know that risk-free rate, it's based on US bond prices and bond yields. And if those get changed, that changes kind of the returns of all the other asset classes as well. So I think that should be essential into thinking about how you do your portfolio allocations.
Nick, do you want to go?
Charu.
So, I would say the markets are not giving as much attention to the fiscal spending as they should. Like I said, there will probably be a breaking point where markets become dysfunctional about it. But when you talk about it in terms of the US dollar particularly, that is something I wanted to cover, but I skipped in my slides because of shortage of time, so I'm glad we're coming to that now. So as much as, the market is seeing Trump to be positive for the US dollar, because of spending, because of maybe even tariffs, which kind of weighs down on Chinese currency or other Asian currencies or wherever he plans to kind of implement his tariffs. But overall, his policies, geopolitics as well, so that kind of brings a safe haven bid into the dollar. Overall, his policies are seen as a positive for the US dollar. But if you take a slightly longer term view, a more structural view, Trump's policies, what do is it forces the governments around the world to really start thinking about moving their reserves from the safety of the dollar to something like gold, silver, whatever that is, Bitcoin in some due course of time maybe. So structurally, I think the Trump presidency is not that positive for the dollars. It's easy to say in two lines where, Trump, he's good for the US, not as good for the global markets, and not good for the US in the long run. Kamala Harris may not be as good for the US economy as such in the short run, but she's good for the global markets, and she would be better for the US economy potentially in the long run as well.
Yes. Now, I'm told we have to wrap. I know we're short on time, but to help us wrap this discussion, for each scenario, either a Trump or a Harris victory, how do you see the asset allocation from here? Anyone can take this whenever.
I mean, I'll take an all-weather portfolio, honestly. 70% equities, 20% bonds, 5% commodities, 5% gold. I'm sure Mr. Jim is not happy with my 5% commodities. I'll consider taking that up, and because I truly believe inflation is here to stay, so maybe I take that up to 15%, and yeah.
Nick, perhaps?
Yeah, I have to disagree with you. A 5%
Finally.
commodity is too low. I don't have a magic number on that, but you can go north of 10% on commodity. Come on, that's worth investing.
I have a good takeaway from this event today, then.
Yeah. Stephanie?
Yeah, so I guess at StashAway, what we do is to look at kind of where we are cyclically in terms of the economy, in terms of growing inflation, and also overlay that with some structural kind of projections. And I guess from a cyclical point of view, we have detected that we have entered an inflationary growth regime back in April this year. And all the data supports that. I mean, we will see continuation of that. And I mean, as we all have talked about, inflation is probably here to stay, which, I mean, we agree with Mr. Rogers. And if you combine the cyclical fact that we're in an inflationary growth environment and the structural problems of higher fiscal deficits, we are actually overweight gold from that perspective. We are underweight bonds, and we're slightly overweight equities as well. So I guess, yeah, that's our asset allocation.
Thank you. I think our time is up, but I think we can continue this discussion for the networking later. Could you please join me in thanking my panel for this robust discussion?